What's going on, everybody? Happy Wednesday afternoon, and thanks for checking into our latest TDR Traded Black podcast. I am your host, Shad Dales. A little bit late here today. We're talking to Raj Grover behind the scenes, having some good laughs, and suddenly we realized it's 4:04. It's time to go live, so apologies. But yes, we're starting out with a bang here today. As we all know, High Tide had some strong earnings from a couple of weeks ago, and today we're going to feature the CEO, Raj Grover, back on the podcast, which is the main reason why you should listen to this podcast. As well, we got somebody very interesting from California, one of the best advisors and consultants in the industry who knows California because that's where he lives. And we talk about the recent banning of all hemp products with THC and whether or not this was the right decision made by the state's government and Governor Gavin Newsom. So with that, let's welcome in TDR co-host Anthony Varel here on a Wednesday. Good to see you. Lots of great topics to get into here this afternoon.
Yeah, it's great. I'm pumped to get the about face with Raj after the earnings and then jump into California with Seth. And it's basically Friday for me this week. So it's good.
Off and golfing, yes. And I'm anxious to see, obviously, you and Raj speaking here because the last time we had him on, I think we were actually going for our dispensary tours a couple days afterwards. So I think he's anxious to see your feedback and what you thought of the overall experience. But man, he always said biggest isn't always best. And the experience that we had from 3 months ago, that was a great experience. He's got a great team in place, but great locations. But we want to learn more. And we did learn actually behind the scenes before we went live here today that seems to be the Toronto market seems to be viable for one. But before we bring Raj on, let's welcome in Guap. Got to bring Guap on a Wednesday because anytime we got High Tide content, one of the first things that Raj always says is make sure that Guap is on the podcast. But good to see you. Happy Wednesday, my friend.
Greetings, Earthlings. Yes, I'm excited to be here on a Wednesday. Usually I'm just having fun on Fridays, but if Raj is giving an interview, I'd be watching, and I'm happy to be here and represent all the shareholders out there.
There you go. Well, with that, let's get into it and start out with a bang here today. Happy Wednesday afternoon. Welcome back, the CEO of High Tide, which trades on the NASDAQ under the ticker symbol HITI, Raj Grover. Good to see you. Where are we? It's October already. Time is flying. Good to see you.
It is good to see you too, Shad, Anthony, and of course, number one Barnacle Guap. Guap, I have to ask for your support. That way it's 2-on-2 versus 2-on-1. You know what I mean? So thank you for making the time on the Wednesday. Sure. Things are going great here, Shad. How are you?
Is that how we're positioning this, Raj, already off the top?
You got to always be strategically thinking and positioning yourself. If you're not doing it, you're shortchanging yourself, Shad. At least that's my philosophy.
You're all about a strategy, that's for sure. But let's dive into some of these numbers. You reported your latest earnings, which is, I think, 2 weeks ago, back on the 16th. We look at some of the highlighted numbers. Revenue reported $131.7 million, the highest quarterly earnings revenue ever reported. That was impressive to say the least, and sequentially reached an annualized run rate exceeding $525 million. Income from operations, $3.1 million. You also reported positive net income of $800,000, improving $3.6 million year over year, and $3.1 million of positive free cash flow, what people love to hear. So how would you best describe, I think, where we are in the Canadian cannabis landscape today? And I guess the position that High Tide is currently sitting in the Canadian cannabis landscape?
So Canadian cannabis landscape, Shad, remains extremely challenging. Yep. In fact, it's become a little bit more tricky as of the last quarter or two, which we can touch as we go through on the podcast. But High Tide has carved itself the best seat on the table. I couldn't be more happier with our position. We're clearly the leaders in the country. You highlighted all of those points already, 6% sequential growth, 6% year-over-year growth on revenue. But the biggest highlight is we have 12% of the market in Canada in the provinces where we operate. That's not a small feat. And despite all of the noise and the competitive dynamics and the illicit market resurgence to some degree, which we're starting to see now, we're sitting in a beautiful position. And as much as we're bothered by these competitive dynamics or the illicit market resurgence, it's going to hurt our competitors a lot more. Yep. And being the front runner already may actually end up helping us in the long run, although that's not how I want help in the industry. I want everybody to succeed. I want everyone to have their fair share, what they can get in cannabis. Illicit is our enemy. They're not part of the team. But it's challenging still in Canada. Very much California type of situation that we're seeing here in Canada. A lot of bankruptcies happening. Tokyo Smoke has gone bankrupt.
Crazy.
So, that was a very large group.
Were you surprised? Were you surprised at all?
That one I was a bit surprised, but you know, what I'm surprised about that it does not matter if it's billionaire backed money or it's venture capital backed money. Money eventually runs out when you don't have a handle on your business and when you're not laser focused on the execution and when you cannot keep that culture together. There's so many ways. Running a public company for 5-6 years now, you know, I've learned a lot and I've learned the dynamics. It takes a lot to run a company, forget about a public company. But in this case, you know, cannabis for a lot of groups was this lavish stream and, you know, consumable focus where you could have this repetitive income or steady consumable income coming in from the cannabis industry. That has just proved wrong. Illicit has remained strong. Margins are razor thin in the industry. And even some of the deepest pockets that people have can't really make stories turn around if there's no substance there. So I was a little bit surprised about Tokyo Smoke. It happened this early, this quick. They had 90 plus stores, but that's what happened to Fire and Flower last year or the year before. So it's just a continued, you know, depressing story around that side. And then licensed producers are not faring much better. I believe 20-25% of bankruptcies that happened in 2023 were still cannabis. So just, you know, by that, you can see how bad it is. And the opposite end of it is how good we're doing, right?
Yeah. Yeah.
When you're talking about it being a challenging environment to operate in Canada, I mean, walk me through that. You said the illicit market is, you're seeing a resurgence in it. Are you seeing a drawdown in the consumer spending? Are you having pricing issues as far as the products go? Like, just I'd love to hear a little bit of color as per the environment.
I'll give you the color, Anthony, but let me start by saying that High Tide is outperforming all of these issues, right? Like these issues are there, but look at my quarter. We've just delivered one of our best quarters in history. I couldn't have hoped for a better quarter. I couldn't have hoped for more significant amount of market share that we were able to secure this quarter with free cash flow, with everything else. Having said that, the overall landscape is depressing. If you look at the illicit market resurgence, we were mainly talking about the online illicit actors that, you know, that were doing an hour 60-minute delivery or 2-hour delivery to your door. And they were really disrupting our operations. We as legal operators are restricted with delivery radiuses where we can deliver. We need to hire our own butt tenders. We need to have our own cars. For example, in Ontario, we can't have, you know, Uber delivering it for us, which is fine because we're still taking off and these rules are being set, but there's no rules for the illicit market. So first they were torturing us mainly through online channels, and brick and mortar had subsided. But unfortunately, you know, since the beginning of this year and now very much over the last 3-4 months, we've seen in markets like Regina, Saskatchewan, Ottawa, Ontario, and also Toronto in a very big way, where illicit shops are being set up. And a lot of these shops are also being set up on indigenous land that borders these cities. And, you know, that's always a tricky play for law enforcement officers on how to deal with that. But I would say close to 200 stores, illicit stores, you know, we can kind of assess at a high level across the country are starting to cause a bit of a problem. But there's also an issue with declining cannabis sales, right? You look at year-over-year sales, we're down roughly 10-12%, which is massive. At a mature market level, we shouldn't be decreasing like that. Illicit is taking a little bit out of that. And the cost of flower at a wholesale level, although now it's stabilized quite a bit, and now those things are turning around, but there's still a 6 to 8 months lag, you know, for us to feel that reality. So because those prices have come down, we've got more members of the Cabana Club, more players are coming to our stores. They're not leaving our stores, but just by the sheer virtue of cannabis flower prices coming down, illicit market resurgence, both on the online side and the brick and mortar side, it puts pressures on the overall legal market for revenue, which includes us as well. So in that environment, to carve out a 6% sequential increase, we were very, very happy with that.
A lot we learned when we were there in Toronto. I want to ask you more questions, but go up. I know you're itching to ask some questions, but fire away, my friend.
Yeah, my favorite stat from the latest earnings report was from October 21 to June 24. Same store sales growth is up 118%, while the average operator in the 5 provinces you operate had a 21% decline. I know the guys are going to talk about the customer experience. We've talked about the discount club model in the past, but what else can you attribute to that type of discrepancy where you're seeing same store sales and everyone else is going down or bankrupt?
Like knowing our business, we know our business, we know this environment, right? We're thriving in this very challenging environment. The discount club model is very innovative in nature by itself, but in a recessionary environment or high inflationary environment where consumers are stretched, it performs even better. So that is one big reason. We also disrupted the market very suddenly where no one had ever seen anything, stuck to the execution, stuck to the goal and vision, and here we are, right? And if you look at our site selection criteria, Guap, we have one of the best site selection criteria. I can very proudly tell you that we take extreme focus in the site that we're selecting. You only get your location once, right? You get to do other things, you get to add other items, you get to expand your product portfolio. You don't get to change your location. Otherwise, you lose the value of the business that you built, right? The business has no value if you move from that location. So what I do is put a lot of focus into site selection. We know we have a winning model, and we constantly strive to bring in the best products to offer to our customers. So not only do we have a promise of unbeatable price, we are the top player in the country for selection. You're giving them the selection, you're giving them the best prices in the country at one of the most convenient locations. You're executing on your game plan operationally, bringing your DNA down. There you have your secret sauce. Of winning this landscape. And there is nobody else that even probably has a proper membership program. We're hitting 1.55 million members of the Cabana Club. There's no signs of this growth stopping. I put a long-term number of 2 million. I know we will easily exceed this. But this is just Canada, and we're going to replicate this game plan in other countries as well.
Who doesn't like repeated business, right? And I think when we were in that dispensary, Anthony, when we saw some of the stuff that's available for members and some of the advantages, I think, with came to price, you can understand why the model is obviously working. Some of the things I learned as well is like we're pertaining to the illicit market, especially in the Toronto area, is that there's a lot of dispensaries that are working under this so-called First Nations license, but the people running the actual dispensaries themselves are not that. There's finding some loopholes to get around that. But some of the conversations are government officials aware of this? Are they getting more educated with this? And do you plan to see a crackdown more from some of these officials pertaining to it?
Yeah, look, I didn't want to put only an Indigenous label on it, but it is one of our bigger problems. I will tell you that. Like we've lobbied the government enough to tell them our stories, and they know what's happening in the cannabis industry. And $31 million were earmarked to go after enforcement in Ontario, and Alberta government has been the most proactive. And we don't have brick and mortar illicit dispensary issue in Alberta. It's the strictest province. It's managed really well in terms of that. I'm very proud to say that in my home province, we don't have this issue. Now in Ontario, where this issue is on a very wide scale, and even in Saskatchewan, surprisingly, because it's one of the prairie provinces, what we are seeing groups do, I'll give you an example, and you'll probably laugh about it, but it bothers me a lot. Like Bank Street in Ottawa, there's a unit on Bank Street. Think of like Queen Street in Toronto as an example, just smaller, okay, just smaller. So on Bank Street in Ottawa, someone purchased a unit, bought the retail unit and like the residential upstairs, and called it Sovereign Land, and advertising $20 ounces of cannabis tax-free. Okay, and they're still there for the last 6 months, and they are only less than 10 minutes away from a couple of my very high performing stores. And we've had to adjust margins. We've had to adjust our margins. Now competing with Illicit, I was already leading the country in terms of the lowest price guaranteed on cannabis in Canada. Now I got to deal with the illicit market, and you can only deal with that to some degree. And again, we're constantly educating customers. You don't know what you're smoking, what you're eating, what you're putting in your body. So all of that is happening, but we hope that this $31 million that are assigned in Ontario to go after enforcement is going to pick up steam. I have grave conversations with Omar about it. I've made it his number one mandate to discuss with the government right now, and they're listening. They're definitely listening. I have to say one thing about the Canadian government. I know the excise tax issue is big for licensed producers, but we've seen a lot of movement. We've seen a lot of great movement from all levels of government. It's very impressive that they're supporting the industry to this level. It's just that we need to do it faster. We need
Yeah.
to be even more proactive than what we've been. We can't let the illicit come back again and set up shop after 6 years of legalization. Makes no sense.
Yeah.
Yeah.
Emergence of an industry, that's for sure. We've seen an overwhelming stat, and I think, Anthony, you highlighted this too, where it's the amount of cannabis consumers in the US. It's like over 80% want to like really contribute towards enhancing the overall legal aspect of the business and buy only from legal dispensaries. Are you seeing like I haven't come across any stats, but are you seeing more of that trend based on, I guess, a lot of the numbers that you're producing? Obviously, explain it into detail, but are you getting kind of that feedback where more and more people are starting to really want to go out of their way and make sure that they're supporting the legal aspect in the Canadian landscape?
We definitely are, Shad, we definitely are. But like in these high population centers, right, like Ottawa and like Toronto, relatively speaking, Anthony, I know you deal with Los Angeles and New York, but relatively speaking, these high population centers, even if you lose 10% of the cannabis customers to illicit, that hurts because they were already part of legal. So for the most part, Shad, that's accurate. People want to support legal. The type of variety we can offer, they cannot even come close to it. We can guarantee this is pesticide-free product, tested, Health Canada approved, Health Canada licensed, federally licensed, provincially licensed. There's deep value in that, and our prices are the best in the country. So this is why we're not losing steam as much as others. We're actually gaining steam still. But imagine what would happen if they were not in our way. We would be producing maybe a $5 million additional revenue quarter. So we're on it. This is definitely a bigger issue on my plate right now because we want to nip it in the butt before it becomes even more bigger. And we're getting the whole industry aligned on this. This is obviously a full legal industry issue. Licensed producers hurt because of that. Independents hurt because of that, and all chains of all sizes, just like ours, and smaller chains also feel the hurt. So this is something that the entire industry is aligned, and we're really pushing the government because it also ties up with the health of Canadians, right? Like healthcare is included here in Canada. You don't pay extra, but we as taxpayers are bearing that burden, and we need to make sure Canadians are protected in that sense as well. So all in all, this is a big topic right now, Shad, and we feel that we will be able to make a dent in this illicit issue going into 2025. It won't happen immediately, but we have ears, government ears, listening to this, and we have some support and some sympathy from the government representatives on this issue.
Good to know.
You had mentioned bringing your expertise abroad into other countries in the last segment. How are things going in Germany? I think you had alluded to that the e-commerce business is starting to ramp up on the earnings call. In regards to Germany, how are things progressing there?
Things are progressing really well. Omar was just in a panel in Germany. I was not going to tell you guys, but I was also there in Germany, and I was listening to that panel, and we're advancing some very good conversations on the ground in Germany. We've got some great consultants that are keeping us posted. And we've retained them for a good year now. So we've made the investment in the landscape there. We're working on a quite exciting idea. I'm not going to give the whole game plan here, but think more along the lines of what we did in Canada, right? And we were head shops, and then eventually we became cannabis shops, and we have accessories business, and we have CBD business. So there's different ways to enter different markets, and we've started thinking more creatively on how we can get a footing for the Cabana Club at an international level, starting with Germany. So I should be able to share something more exciting with you over the next time you invite me. I should have something concrete. Things are in the works. And on the e-commerce side, I think things got a little bit mixed up. It was not e-commerce related to Germany. It was e-commerce ideas that we were going to innovate on. In fact, it's already in the works. And that announcement is going to happen before the German opportunity that I'll share with you in due course. So e-commerce is in the works. Remember, e-commerce is only 7% of our revenues, and it's not an immediate thing for us to shift our focus from bricks and mortar and bring it to e-commerce. But with the ecosystem that we have, we build this very deep retail ecosystem that supports in different times and different innings of cannabis. It's supporting bricks and mortar. Now bricks and mortar could potentially support e-commerce until e-commerce starts thriving. So we're working on something very cool and creative. Hopefully the market likes it. We're still about 2-3 months out from that.
Lots of stuff. Yeah, go ahead, Guap.
Yeah, I've got a graphic I'd love Arns to bring up because as a high tide shareholder, I definitely noticed when the new investor deck dropped with like 5 new slides.
Yeah,
So
it's impressive.
this is new, and my theory on this was, so this is dollar per square foot of Canna Cabana versus a lot of pretty well-known retailers. My theory on this was so that high tide doesn't get lumped in with the rest of the cannabis sector as something for institutions to be wary of. This is, to me, if I was an institutional investor, this is the type of like eyebrow raising slide where you're ranking yourself amongst some of the greats of retail, along with what also is very interesting is you're I believe one of the fastest growing retailers in North America along with this. So how is this resonating with institutions, this particular slide?
Well, look, I'd like to think the buying we had yesterday, we traded 1.5 million shares on the NASDAQ. That was nice. Intraday, we were up 10%. We closed 7-8% up. That was really nice to see. And, there was somebody that really wanted our shares. And these things are going to happen. I'm surprised it's taken so long. But then again, we live in Canada. Canada's a depressing story. We're the superstars here in Canada. But it's overall a depressing cannabis landscape. So we have to deal with all of these macro factors that are still affecting high tide.
Yeah.
But by doing this kind of innovation, we really looked at it. Like if you white labeled my numbers, you white labeled high tide numbers, 525 million in revenue, $21 million trailing trailing 4 quarters of free cash flow, 2 consecutive quarters of net income. Q1 we were already break even in net income. A loyalty-based, membership-based, very revolutionary, innovative retail program. We're not getting the love for that. We're just being lumped in, okay, you guys are doing better, so your stock is surviving, but others are just dying, right? So we wanted to sort of white label our numbers and say, look, compare us with other retailers. Don't look at us only as a Canadian cannabis retailer or as a cannabis company, because we're being judged with what's happening in cannabis in general. Look at our performance, and institutions love it. I have a day full of desk presentations in Vancouver tomorrow. I'm flying tonight. Vahan's meeting me there. Then I'm going to Toronto I have 10 institutions lined up that I'm speaking with in Toronto as well. I'm doing that from Monday to Wednesday next week. So there's a lot of action, and there's appetite that we're starting to see for the high tide story. And there's more inbounds into us that, Raj, we want to learn more about high tide. So I feel we're at this very interesting tipping point, and this kind of results that we presented, which we've been doing for a long time, nothing new here, always exciting results, plus coupled with this new investor presentation, we really wanted to showcase our retail personality, that look at us as a retailer. We know how to run a tight business. We're a retailer first. Cannabis is here today, but we built this Cabana Club community into 20 million members. What happens then? What else can we sell our Cabana Club community then, right? So there's a lot of innovation that can happen, and that is starting to resonate with these retail style metrics that we're presenting.
All right. Well, in closing, we're at a tipping point. Where would you say is the, I guess, the retail dispensary landscape? What is like his biggest, boldest predictions, I think, for the overall Canadian market, would you say, in 2025, Raj?
So, Shad, I believe we had touched like 4,000 stores. We're down to like 3,700 stores. We've come down. Another bold prediction, more bankruptcies galore. You're going to see, I'll talk retail only. Producers, not my world, or not my world yet. So I'll talk retail only. But if Tokyo Smoke can't survive, and Fire and Flower cannot survive, and Chiaro and Trees and 420, and the list goes on, can't survive, I think there's a lot more to come in terms of these smaller regional chains. Shiny Bud just went bankrupt. They were also publicly traded. Chiaro also publicly traded. They've all gone bankrupt. So the smaller players and the mid-sized players are going to face deep troubles between now and the same time next year. If we speak again in the next 12-month span, you're going to start seeing a lot more players out of the race. And what you'll also see, we put out a long-term goal of 15% market share. we're already at 12% market share. Like,
Yeah.
it couldn't be, that was a big surprise for us as well. We jumped from 10.9. Now these numbers can fluctuate because we only had data until June, right? So numbers can go slightly up and down, but the rate at which we are accelerating and others are declining, aka to Guap stat on 118% same store sales increases versus 21% decline in average operator, I think you'll see us in 12 months very close to that 15% market share level. Close to, I don't think we'll breach it, but that was our long-term target, and I might be giving you a better long-term target once we get there.
So just one finishing question. With the deterioration of your peers and seeing them go out of business slowly over time, and let's say that trend starts to accelerate, do you look at those as, let's say, assets to pick up in receivership, or do you kind of let the dust settle, go in and survey the areas that they're operating in, and then go be very strategic in selecting those sites in those jurisdictions to eventually expand your market share coast to coast?
Look, the number one thing is, Anthony, that we need to be strategic when we're looking at our retail portfolio, right? You can't get excited about, hey, 90 stores just went bankrupt, and I'm going to pick most of them. There's a reason why they went bankrupt. I've looked at 10 Tokyo Smoke stores, and this is not the data room, which I will sign an NDA with the receiver, and that's not something that I can share publicly. But I can tell you there's sites that are there right now that they closed, or the landlords are soliciting us because they may be in a default situation because of their bankruptcy. This is a standard clause in the lease that if you go bankrupt, or we have the right to terminate your lease, right? Now, there's some angles and some opportunities that pop up because of that. But even when we get solicited by those landlords that, hey, would you like to take over that lease? And you look under the hood, and like, thank you very much, I'm not paying $20,000 a month in rent, or I'm not paying, I'm not getting a 4,000 square feet store. That's for my friends in America. We're not in US yet, and even then we'll have a different plan. So that it's a balancing act, but we are in every data room. We're looking at everything carefully. But if I can produce stores for 260,000 Canadian dollars, in your world roughly 180, 190, US, plus 100 grand of inventory, selected next to Costco or LCBO or Walmart, cherry pick locations that I want, what's better? It's just patient growth, right? It's investors want it overnight. I want it overnight, but I know what's right for the company. In that sense, we're more organic focused, but as soon as we get the opportunity to get a portfolio of stores that makes sense, we will pounce on it.
And it was funny. It's funny you say that, because when Chad and I were in Vancouver, we were in a dispensary that was absolutely beautiful, and you actually rubbed off on me. I walked in the dispensary and I'm sitting here looking around, and I'm like, 3/4 of this thing is not even floor space that they're selling product. It's a showroom. And then we get in the back, and I'm like, all right, well, that's where they're selling product. I'm like, this has got to be either does absurd in foot traffic, and they can just afford to have that space. But I was just thinking in terms of efficiency, and I'm like, this is on a per square foot basis, they're underutilizing this entire spot that they're
in Vancouver. Vancouver rents are not cheap.
On Robson Street too. Right?
Oh my God. Robson's $90 a square foot, chat. That $100 a square foot.
Is that what it is? It's
Robson
about
Drive in Vancouver is close to $80-$90 a square foot.
In fairness, they had every brand you can possibly think of. The first 3/4 of the actual building, but to Anthony's point, it's like if you walked in, you'd be like, where's the product? It was a kind of a cool experience. But if you're there for one specific reason to get in and out and get your product, like it is a little misleading. But I will have to admit the company that is actually running it, they've been doing a very, very good job.
Beautiful store.
That's a
beautiful store. I walked you through it. Basically, I saw it as like a consumer journey that you have to kind of go to get to the back where they actually sell the product. But we were talking just sheer economics on like a per square foot basis. That's immediately what came to mind. I was like, wait a minute, 3/4 of this stuff is underutilized.
Nice. But I hope you found the Parliament location beautiful when you.
We did. I love the Parliament location. The staff there was great. The store was great. Products were great. Just the layout and how everything was done. Yes, I had nothing but resounding positive reviews on the Parliament location.
Here's what I like. I moved to south of Etobicoke in Toronto, I don't know, 15 years ago. And I remember at the corner, there was this Bank of Montreal building out in the middle of nowhere in the middle of a field. Fast forward 15 years later, and there's about 20 condo buildings surrounding that Bank of Montreal. And it's like, when I think of that Parliament location, it used to be like, there was some bad parts of Toronto, but is completely changed. And there's young entrepreneurs everywhere in every single industry you can think of. And let's face it, the cost of living in Toronto was not necessarily cheap, especially for homeowners. But you're seeing developments of condos and stuff like that. And actually, not only young entrepreneurs, but at the same time, 2 young families that are living into the area as well. So it's an up and coming area, and it's all about location. But you want to get ahead of the curve and not necessarily just open up a dispensary on Robson Street when it's already been established for 50 plus years, right?
Yeah, 100%. And that's, it's great that you bring up Toronto. We were growing more in the ancillary markets, looking at the competition and the illicit issues in bigger cities.
Yeah.
Delivery availability in 2 hours, illicit delivery availability. And now that our brand is so massive and so strong, and Cabana Club has grown so much, we feel very confident that now we're looking at Toronto again, all of the major intersections where we can go and position our stores, because given our brand name now, the bigger cities really help. So we're now actually looking back at Toronto, downtown and beyond.
Sounds like a man on the street type interview with you in Toronto coming up soon. What do you think, my friend?
Let's do it. I'm actually in Toronto next week if you're free.
I know.
We're in or we wait for another quarter.
We're in Chicago at that Benzenga conference. Let me know when you're in Toronto next, because that'd be cool just to kind of walk around and just give people a visual understanding as to like what you're seeing within the actual market itself. But
I'll follow your lead, because I've seen you walk around in Washington and just kick butt. So I'll just follow your lead. Okay.
It ain't easy. It used to be brown hair 5 years ago. It's gray now, my friend, and there's not much left. Anyways, good seeing you. Nice job on the numbers. Great jobs asking the questions, Guap and Anthony as well. Got a lot of great responses here. And we don't like to pump and promote stocks when we're on here. We want to be like, just transparent and pretty accurate. But look, the numbers don't lie. So keep up the great work.
Thank you so much. Thank you.
All right,
sir.
Thanks,
Appreciate
Raj. Heck of a story that he continues to build, but we saw it firsthand at that Parliament location. But I know the city, been here for a long time, and that's the thing. If you can find specific areas that weren't really all that developed, and it's the next big thing, and let's face it, when it comes to real estate, no city has grown bigger than Toronto in North America over the past 20, 30 years. And it continues to grow even post-COVID. But he's found some great locations and tons of population. I think the one day that we were there, before it was even 10 a.m., the amount of traffic that was hitting there, even on the middle of a weekday, was, I guess it was the norm. But, again, numbers don't lie. So,
no.
Yeah,
anyway, sorry.
Operators operate. He's doing it in the toughest environment possible. So, I'm definitely betting on that team. I can't wait for them to get into Germany and the US. And something that I, find interesting is, the whole location selection. Like if you look at dollar stores, especially where I am in the South, there's some towns where it's like it's the only place. So there's something about serving underserved communities as well there, not just, going where all the other stores are, just go where they're not. And I think he gets that as well.
Yeah.
If you look at where his stores are located. So sharp dude.
All right, sir. We will see you back here on Friday for mic drops with Guap, among other things. But thanks for checking in here today.
Yeah.
And we'll follow up with you later this week. All right.
For sure. I'll move into the background and watch this next interview.
Yeah, it should be good. Good. Thank you, my friend. All right. So a lot of conversations that you and I have had, especially you, pertaining to this whole hemp side of business, and more specifically in the state of California. So let's move into our next segment, switch to California, and let's welcome in capital markets advisor to Glasshouse Brands, along with investor and advisor to the sector, Seth Yakatan. What is going on, my friend?
How you doing?
I'm good.
Happy to be here.
I like that little headpiece there, man. It's
well, you got to rep the brand a little bit, It's okay.
So I think people that
honored to be here. Thank you very much.
I appreciate it. I know when we were at Benzenga, Anthony, when we met with Kyle along with you, Seth, we got a chance to go for dinner with you the one night, but extremely well connected within the industry. What I love about you as well and your story is just really understanding the history and culture side related to California and cannabis. I know there's a lot of stories that you could probably tell, and we'd love to hear all of them. But listen, I think the big reason why we wanted to have you on here today is just there's this news. Obviously, we had Kyle on, I think it was last month, and he was talking about something that they would consider about flipping potentially to hemp with some of the facility that's at the facility in, where's it located again in California?
Camarillo.
And since then, obviously, the state's come out and basically banned all hemp products containing THC, which was announced by Governor Gavin Newsom. I think that went into effect earlier this week. But first thing I wanted to ask, was this the right decision made by the government in the state of California?
Gosh, I've never been on your show, Shad, and I know you guys focus a lot more on the political side of things. That's not my game. I am of the opinion that government is best, which governs least.
Yeah.
So I don't understand a lot of things that government does. I don't understand why he enacted the ban. I don't understand a week later why he then enabled cannabis lounge consumption to be legal. So look, I think if you're trying to protect the regulated cannabis industry, figuring out a way to shut down illicit and shut down hemp, which is kind of taking share away, has a motivation. I'm not gonna. I think most politicians are idiots. So this just seems to be another reflex of stupidity, as opposed to well thought out.
Yeah,
I guess.
So, question, Seth, taking it from a product's perspective, why, or in your opinion, why is there a need for hemp products in a state like California with a state-run legal cannabis industry?
Gosh, Anthony, why is there a need for 17 cheeseburger places?
Okay.
I don't know. I think what you found is that, in specific product sets, hemp is easier to get. If I'm a producer of product, the legal and regulatory framework that's been established for the sale and distribution of regulated cannabis is fairly onerous.
Yeah.
I can grow a hemp plant. I can put it into a product. I can get it into retail like any other product, and I can ubiquitously distribute it. So I don't know that there's necessarily a need. I think given the inefficiency of market access, there has been a consumer demand. I also think in states where you don't have regulated product, this has shown up as a alternative to cannabis. I also think you can potentially, in some instances, make it cheaper because there's less tax.
See that completely. And I mean, it is actually a very good alternative. Well, not alternative, but it's more accessible on a consumer basis, especially even in my state in Florida. Medical, it's got barriers to entry. Hopefully we get adult use passed come November. But I mean, as far as hemp products go, they are much more accessible. I can buy them with a credit card, and they can show right up to my door at my house, and it's a much easier, less friction process.
So I think accessibility has created the demand.
Yeah.
Is there a need for it? I don't know that there's a need for it. I don't know that we have a need for another sports beverage company either. But someone's going to try and start it, right? So
we actually know one that's coming out in the next couple of months.
I bet.
So how are things going in California overall? I mean, I thought it was a little bit of a mixed message with the cannabis cafes getting green lit, but the farmers market, which to me sounded like a great idea, which I know had the caveat of state run, got shut down. Were those mostly to get like the farmers and some of the OG growers and market participants, just give them another outlet to really have their product in the hands of the consumer, even though it would be obviously in a regulated, ran ecosystem?
I think that was the motivation. I think in the United States, I'm a history major, and you have this constant struggle between state and federal rights historically. Most of our hugest issues of the country have come down to that. We had a small war in the 1800s over the difference between states and federal rights and the humanity of slavery, right? So in cannabis, it's even more complicated because let's just look at what Newsom did recently. He said, okay, I'm going to allow you to now serve food and cannabis in the same place. But each local municipality can do that on their own. So I'm going to tell you what, there ain't going to be no dispensaries in Beverly Hills, and you ain't going to go smoke weed and eat food in Beverly Hills. But you sure can do it in Santa Monica, right? So when you kind of look at enforcement of it, and how it manifests, I don't know. And why things happen, I don't know. If I go back to your farmer's market, yeah, I think the farmer's market was a way to empower, the small guy who's been marginalized. A lot of the craft people in the industry have not been able to compete with the glass houses just because of the access to capital and the economies of scale and the size.
Yeah.
And sometimes when you see something like that, where you have an agenda and you have a political program that could probably do good, and for whatever reason it doesn't occur, it just frustrates me more about politics. And I think it makes it harder. Let me loop back to another question that you had. California is a knife fight, bro. And it's going to be for the foreseeable future. You probably saw on Friday that State House, their major lender filed for receivership.
Yeah.
Not to toot my own horn, but that is something I've been publicly prognosticating for about 8 months. There's probably 2 or 3 other shoes that are going to drop there. Retail is a very challenging environment here at the dispensary level. It's not simple. There are 4 or 5 people that are very, very good at it. But, it started with the bankruptcy of Herbal in the summer of 2023, when you had that middle layer of supply chain go down. And it's been a slow, staggered, problem that I think you're getting close to bottom to. I'm not sure you're at the bottom yet, but you're near it and approaching it. But it's difficult. It's a difficult environment to make money. It's a difficult environment for specific companies to be profitable in the context of a $4 billion market.
Yeah.
Do you feel like you have to be there in California if you're a brand and you want to have, let's say, national staying power? Like, you need to be able to compete and have your product on shelves to get that notoriety from a brand perspective?
Perhaps. I think the global culture of cannabis is still coming from California, and I still think there's a very strong California bias. I think we can come up with a couple of brands that I will just talk about in the edibles space, like Wana and Groon, who are really not in California and are successful and have good businesses. And we could talk about another edibles company called Thunderstorm, which is based here and has a good business. So I think if your origin story is California, you probably need to be here. I do think, though, that you can have an effective national cannabis brand without being in California if you're not from California. Kiva and Camino and Lost Farm, as an example, is California origin story. And moves. Stizzy is the same thing. Cookies is the same thing. So I put up a post a couple of weeks ago in conjunction with HITI where I talked about the 20 top brands in the United States, and the preponderance of them were MSO owned, and all the ones that weren't MSO owned, aside from Wild, had started in California. So there's a trend there, and I think you're going to see long term the value of brand exist. And I do think California will be at the forefront of that. For me, California is going to be the biggest market for cannabis until my children have children. I don't care what any number says. I don't care what anyone looks at. New York is going to be a complete, Keystone Cop clown show, Rambo 7, type of scenario for the next 5 or 6 years. I live here. My tax base is here. I'm embedded here. I'm paying the freight to be next to the ocean and maybe fall off. And I do think that you're going to see the generation long term of significant value out of California and significant M&A events out of California.
What do you think about Florida going adult use, and Florida starting to scale? I mean, we could hit that $4, $5, $6 billion mark pretty quickly when you calculate in the tourism numbers and the scale of the industry that it has right now.
I'm going to say something publicly that I've said a few times. I think Florida is Kim Rivers' state to own and dominate, and she's dominating it, and she will continue to dominate it. And I think what you're doing in Florida with adult use coming is you're playing for second, third, and fourth, right?
100%.
You're swimming against the U.S. or Australia in a sprint, and you're hoping to get a silver or a bronze. I think Florida is one of those explosive states that I get, as you can see, I get really excited about.
Yeah.
Pennsylvania, Maryland, Ohio is the same thing. Again, let's go back to politicians. You seem to have a politician who, mentally relative to the psychology of the U.S. is back in 1962. So maybe you get some relief there if you get the voters to really show this is what you want to do. But I think Florida is a state that could honestly double, or triple.
Yeah.
And I think, for me, I got into cannabis because of the wellness aspect of it. And one of the first businesses that I tried to do was I thought I could do an ice cream truck model with essentially a caregiving nurse to every high rise in Boca, right? And I was just going to go and put product in.
How'd
and when
that
you
go?
it didn't work. It did. Add it to the scrap heap of incinerated tax loss.
You could do it right now with hemp. Beautiful.
You could. I was involved for a long time with a company called Ease. I'll pause on that.
Yeah.
But to your point, I think the opportunity for Florida to emerge as maybe one of the biggest states, and also a state that functions properly from because of the vertical integration, you're going to make, if you can figure out how to get into Florida and get product sold, you're probably going to be able to make money. Whereas in California, because you have layers and layers and layers, it's hard. I think Florida is one of those states that will be, what we're talking about as the industry grows and expands. Yeah. And you're going to be able to see how, the transition from a 10-year medical state goes into rec very, very explosively. But make no bones about it, I think Kim is one of the savviest operators in the industry. And I think she has made her bed and is going to bet, generations of return on the expansion of that space. She is. I know she was on your show a couple weeks ago or a week or two ago. I saw it. Huge fan of hers. And I think, Boris is playing for second there is really, really what I think.
Yeah. I mean, she's also brought in brands. She's got Alien Labs and Connected from
she
California.
has.
She's got Sunshine Cannabis. That's a homegrown brand in the state. Then you've got Brady Cobb with Sunburn, which is a true Florida brand.
Huge fan of Brady, huge fan of Sunburn, huge fan of that story. It doesn't get more authentic than that.
And 710s down here, Backpack Boys, Jungle Boys. They're all West Coast transplants that are getting love.
I think Ivan and Jungle Boys has 10 stores there now. So
they do. They hail in comparison in terms of scale, but on an ounce per store basis, they're selling flower. And the Backpack Boys 710 are doing good too.
I also need to give a shout out to my guys at the Flowery, who I know are ripping it down there as well.
I know Lod and Jack. Are doing quite well.
They're doing a great job down there, and some of their owners are people that I have a lot of respect for. So
Seth,
great setup.
Speaking of great job, you've got close to 36,000 followers on your LinkedIn profile, and a lot of your posts are averaging between 500 and 1,000 likes and over 200-300 comments. So job well done, to say the least. And I think if anybody wants to know how to manage their LinkedIn profile properly, they might want to follow up with you afterwards. But when I talk about doing things efficiently, one of the posts that actually stuck out with me recently, you outlined that these are the two biggest investment trends you need to watch in cannabis now. One, equity valuations that are an all-time low, and two, debt refinancing is happening. This means buy equity in the strongest companies. They're only getting stronger. Seems pretty simple based on what you just outlined, but do you want to elaborate a little bit more on what you're getting to there?
Sure thing. And thank you for the laudation on LinkedIn. It's been a lot of work. I will tell you that $8 and being a LinkedIn influencer will get you online at Starbucks in October for his pumpkin spice latte. So maybe you can tell me how we make money off of that. But right now it's a lot of fun. But it's not, it's work. If I look at top 10 MSO life science comps, and I look at any, trading multiple, and let's say, last 12 months or next 12 months, your US MSO average is 1.8x revenue. Glass House is trading at about 4.8 0.8x revenue.
Yeah.
And if you look at where they're at on historic 52-week high lows, they're near it. And their year to dates are down significantly. So like Cannabis as an example, love the team there, love Jassy. That's a stock that's down 50% on the year. Nothing's changed except they sold off assets. If you look at Curaleaf, it's down 27% on the year. Terrason's down 27% on the year. Trulieve has been crushing it, but Verano's down 30. So if you look at the cohort, I really don't think scheduling is priced in. I think these stocks all on a macro basis trade like micro caps. I think if 3 happens on December 3rd, which is my birthday, thank you, I think you're going to get a 30 to 40% price bump in it. The folks that have been listening
on November 5th, Amendment 3 you're referring to?
On December 3rd is when the DEA is going to come out with their announcement on their opinion on 3.
Correct. So from my understanding, the hearing, as we've talked about, Anthony, that's going to be a couple of weeks that'll take you into the new year. But is there any information in December that could lead to stocks actually getting a bump?
I think the outcome of that hearing could be interesting. I think you're going to get a signal. I also think if I just go back to the macro viewer that you have that's been in the sector for 7 years, if you haven't been able to take profit out, I do not think scheduling is priced in. I think you're going to get a 30 to 40% price bump in most names across the board on that day.
Ooh,
and I think if you're in,
statement. Wow,
I do timestamp it because I think I'm going to be right. I think you're going to make a lot of money, and if you're long the sector, dollar average down now because I think you're going to get a bump. And for anyone who's new to the sector, and I think if you buy, GTI, Curaleaf, Verano, and Glasshouse, and you take $10,000 and you put that piece of your 401k in a portfolio and you forget about it for 10 years, that's going to be an 8 to 10 bagger. Like there's just no doubt. When you look at the multiples that alcohol and tobacco companies trade at relative to cannabis companies, you're a log order away from where those stocks trade at. And one of the things I love to do, and I'm going to do a post on this, is there's a shopping center near my house that has a sports nutrition store. It has a sun tanning place. It has a dry cleaner. It has a lip injection guy. It has a coffee guy. And it has a Subway in it. All those things are selling drugs. They're just different form of drugs, right?
Right.
Yeah.
So with cannabis, what we've done is we say, no, you got to go to the worst part of California to where you might, experience unsavory people to put your dispensary. That dispensary should be right there, which is probably why hemp has gotten acceptance. But I think once you see the normalization of that and the unlock that I think we all think is coming, I think you're going to see these things go right up.
So when you look at some of these major MSOs, you think they're the at least 8 to 10 baggers as far as like where we're at with the prices right now. That's what you're thinking long term, I should say.
Yeah, I mean, look, I hound him a lot online, but look at GTI. Right, GTI is a company that trades at 6 times EBITDA.
Here come the comments in about people who are owning specific stocks. We try to don't get so fixated on one specific stock. But
Seth's context was on a 5-year basis. I mean, 5-year basis, I would expect those returns from these companies as well, or something went very wrong in the thesis.
Yeah. So I mean, you have a peer group on average. If we look at the top 10, right, that's trading on an average of about 1.7 to 1.8 times EBITDA. Right, or economic value to sales. Sorry, EV to sales, 1.2 to 1.8 times. Your tobacco and liquor companies trade at 6 to 10 times all day long.
Yeah.
Right. Okay, so if I'm wrong by 700, by 1,000 basis points, I'm still right. Right. If you get a 2x increase, and GTI goes from a $2.5 or $3 billion market cap to a $5 billion market cap over a 5 to 6 year period, I'm right. And that doesn't price in any inevitable consolidation and any inevitable entrance of all of the verticals that I always talk about coming in, from pharma and tobacco and CPG and wellness and beverage and alcohol. Because in cannabis, what you have is you have a product that's competing for wallet share for all of those verticals, right? And has a lower level of penetration. So eventually some smart guy at Dr. Pepper Keurig is going to go, oh gosh, well, I can just take that customer and sell them the same thing. It's inevitable. It's inevitable.
Where are we 5 years from now in this space? How many companies are still left, you think?
Boy, oh boy. I think you're going to see further attrition at the large level for two reasons. Most of these companies have been, with no disrespect to Canada, reverse mergers in Canada. And from a wrapping perspective, that doesn't create long-term shareholder value from an equity. And we can empirically discuss that. The other thing is these companies have also then been saddled with a lot of debt. So I don't want to be a prognosticator of doom, but if I look at someone like a Forefront, or I look at someone, right, or if I look at like what AYR and Ascend did, where they basically just traded a bunch of debt and exchanged it for equity to kick that debt down the road, you do have some pretty decent sized looming debt maturities that I think will force some of these folks' hand. We talked about State House, which is probably the largest thing to happen in California in a while. I have a huge amount of respect for Lori, who's the CEO of Gold Flora. I'm looking at that and saying, the math doesn't math, so something's going to happen.
You took the words out of my mouth. I was about to say, after that last financing round that they have, the math doesn't math, especially when you look at the cap stack on that name completely.
So I think you're going to see the combination of, micro cap equity behavior and too much debt on some of these assets act as the forcing function for some level of continued, kind of failure. But I still think that, the market's awesome.
Well, like you said, eventually one day you got to start turning a profit because the debt man's going to come to collect his money. And I understand that. And I'm curious to see, we always talk about certain legislation and how it would be very ideal and helpful for this industry right now, but you can't obviously bank on that. But we are starting to see, based on the latest earnings, especially the last 2 quarters, a gap that's starting to widen a bit here, pertaining to the GTIs and Trulies of the world. And let's face it, that trend's only going to continue more and more and more with how they're performing. And I'm just curious to see like how things will start to, what they'll look like 5 years from now. And, most importantly, just how the overall industry starts to mature. But what were you going to say?
Something that I talk about with broadly, and it may or may not be super applicable to your guests, is that I do think there's a lot of amazing private companies out there where I've spent a lot of my time. And when we look at operators in the lower middle market, there's probably 10 to 20, 3 to 5 state MSOs that if you're not involved in the industry, no one knows about. I think they're going to be on fire. I repeatedly talk about a lot of multi-state brands that are also, really on fire. And I think where you're going to see a lot of action outside of the Pubco side is when the walls eventually come down, those lower middle market companies are either going to be platforms off of which things are going to, leverage, or they're going to be the ones that get, the targets that get sought after, because some of them are very profitable. And I talk about a lot of them. And I also think that if I'm, a TerraSend or a Verano or an AYR, I'm looking at those because they're cash flow and I have money, public currency and cash. So I do think you're going to see kind of this private consolidation wave, which occurs. There's a lot of talk about beverage as well. And I do think that that's one of the first places you're going to see strategic crossover is in beverage.
Look at Ohio, like August 6th, the end, the first month, 44 million. And what a start that state has had with no lead up time. But you can understand why, I think you're right. There's some very viable private companies that are going to become important assets for some of these Pubco companies as they start to expand into more and more states. But that is a huge trend that's probably going to happen the next few months, if not years.
Yeah, I think, again, just to toot my own horn, in conjunction with HITI, I put out this kind of top 20 league tables of MSOs. I've been dropping that once a month. And I would say that 40% of that are private companies. And Stizzy is probably the largest private MSO in the United States. And without disclosing, any material non-public information, they're probably very close behind a company called Good Day Farm, which Management of Good Day Farm does not want me to talk about, but it is one of the best run companies in the industry, and they pretty much own, the Southeast when it comes to cannabis. So you have two MSO, kind of AYR, Ascend size companies that just don't even show up on the radar screen unless you're, into the industry. And I think you're going to see a lot of those.
You've got companies like C3 as well, Holistic
Exactly.
Industries in the Northeast. I feel like those are going to be the assets that get targeted by private equity. It's not going to be, if and when that actually shoe drops, it's not going to be the pubcos that we know now. And I could also see like a mega merger coming with a couple of the tier ones.
So shameless plug. I'm gonna, I have a lot of friends in Missouri. I have a lot of friends in New Jersey. You have 7 or 8 operators there, Illicit Gardens and Greenlight, who are among them. That's an ecosystem that really works. And you have 6, 8, 10, people that own 10, 15, 20 stores and are vertically integrated. You could see a combination there. I think you could see assets plucked out of Missouri. You have another group, including See-Through, that we haven't talked about, called Nova Farms. And Derek Ross is powerhouse, right? Like the passion, the connection that he has, the understanding of brands. He's actively, shining a light on MSOs and saying, I'm coming for your customer and I'm taking them out of your parking lot. Like it's coming. So
I've wondered, maybe you have insight into this, but I've wondered for some time why MSOs, maybe it's because none of the companies that are in that market want their stock for currency, but why MSOs aren't going into Missouri and plucking assets as accretive acquisitions and just to buy that cash flow. Because Missouri is a relatively stable, profitable market that a lot of MSOs don't have exposure to.
I think because it's hard, and I think because the people that have been there for a long time, and they do not want to trade cash flow for MSO paper.
I don't blame them at this point.
I have publicly, kind of baited Ben Kovler. I do not. It's a good thing I advise Glasshouse, and it's a good thing I do not advise Curaleaf, Verano, or GTI, because I would be running a deal team of 6 snipers, and I would be throwing term sheets at everything with cash flow in the United States now, as opposed to buying my stock back. So Ben, if you want to come on the Dales Report and defend your strategy and debate me publicly, I'm giving you an open invitation as my friend to treat you with respect and love here.
And on behalf of Anthony and I, we agree to that.
Ben is one of the. Ben is actually the only CEO of a tier 1 that has not appeared on the show. Thus far.
Well, we've reached out to some of his former team members that actually know him quite well. He's just not that type of guy. Doesn't like interviews. But listen, this has been great. We've had a lot of great feedback and comments here today. Had some people say this is like new guests and new lifeblood. We need to have you on regularly, my friend. I know you're a busy guy, but I think it would be very, very helpful to have you on.
Well, don't tease me, because I would love to be on. I couldn't tell you how appreciative I am of the platform and of the time. Huge respect for what Shad, you and Anthony have built. You have an amazing platform here, and I am honored that you would take the time to have me on, and I am shocked that anyone who listens to me would spend 10 minutes out of their day listening to me. But happy to come on anytime, and just really grateful for the opportunity. So thank you very much.
Well, appreciate it. Are we going to see you next week in Chicago?
You bet your sweet Aunt Susie you will, bud. That's come on. That's like my zone.
You're keynoting the hoodie event, aren't you, on Monday?
I am. That is an invite-only private event, but yes, I am speaking at the hoodie event. They've been very. Hoodie has identified the fact that I actually have an audience, and has been very kind to partner with me on data for my LinkedIn feed. And yes, I am speaking at their event and keynoting it with Aaron Gray, who was the lead analyst at ACG. Correct? Yes.
Yes. Yeah.
Yes.
Yep.
Okay.
Well, I got to run. I'm a Tigers fan, and they just scored 3 runs in the top of the 8th. So I got to see the last of this game. I know there's not a lot of baseball fans here, but hey, it's fall baseball. It's always a good time of year. But look forward to seeing
White Sox fan. Thank you very much, guys. Appreciate it.
Look forward to seeing you next week in Chicago. Oh, is that what you
Chicago?
Talk to you soon. Thanks.
Thanks, Seth. Appreciate it.
Yep.
Wealth and knowledge, to say the least. That's for sure.
Yeah.
But there's a
It's
reason
great to talk about private. One thing we never talk about is private MSOs. And that is it's a large part of the industry.
Yeah.
That is very, very active, especially from an asset perspective.
Gop, that was a rather interesting one, but yeah, I think it's definitely something that we should highlight, because I'm sure that there's companies looking to expand into that Ohio market, and probably looking at a lot of private companies right now. And man, oh man, I bet you some of those companies wish they were getting some of those Ohio assets probably 6 months ago prior to now, because man, I'm curious to see what these latest numbers in September are going to be in comparison to what we got off in the first month. But all in all, it's great for the industry, but some pretty promising predictions as he was kind of outlining over the next 5 years within the industry, and gave some great comparisons from other established industries. So again, we keep reiterating, I know people like to day trade and do a lot of that stuff, and it's a highly volatile industry, but again, if that's your approach, then you do that. This is not investment advice, but we obviously like to educate people on how the industry is basically developing today, but also where it's going tomorrow. So hope everybody got some great feedback here today. Raj was a champ too, but a great show to say the least. All right, you're off, heading to South Carolina tomorrow. So Guap, you and I will hold the fort down on Friday. We'll have to figure out some guests. I know there are some people commenting, including you, Guap. We need a big Democrat on next to balance it out. Yep. I'm all for that. So if you can think of a big Democrat name that we can get on, who are 2 or 3 or even 4 names that you think that we should have on? Leave some comments below. We'd love to hear from you as well. Biggest day growth ever yesterday for our baked in daily newsletters. So appreciate obviously the support. If you haven't done so already, please subscribe to our baked in newsletter. QR code is below. And I've also noticed that 40% of our viewers every single day here on the YouTube channel are not subscribed. So greatly appreciated if you could subscribe to our YouTube channel. And we want to continue to grow this audience. I saw you squinting there. Is there something you were questioning there?
John Verville is either being didn't we say Democrat? Marco Rubio and Dave Joyce.
Those are Republicans.
Those are very Republicans.
Chuck Schumer keeps calling me trying to get on the show, but
yeah.
We'll see if we can squeeze them in. I mean, for me,
her first name starts with a K and her last name ends in S.
Brian writes, I know. Honestly, my friend, I've got literally 30 sports jackets behind my computer here, and I always wear this one. But you're right. My wife always says, switch it up. So on that note, I'll make sure that I put this blazer to the back of the closet and bring it out in a couple months and start bringing out some new ones. But I don't really like the blazer look anymore. I like the t-shirt look. I just brought it on because I wanted to look all professional for Mr. Grover, which, I thought was a great interview. But gents, Tigers are going to the top of the 9th up 5-2. Let's go, baby. That's a Moneyball story. That's a great story. Enjoy your trip, Anthony. Guap, we'll see you back here Friday. Everybody, thanks for joining in. Leave some comments below. Let us know your feedback when you think of these week's shows and some of the guests that we've had on. I think we're building something good here. And as well, we'd love to hear back from you. If there's anybody new that you want us to have on, let us know. Love your feedback. Smash that like button. Subscribe to our channel. Gents, have a good day. See you back here Friday, Guap. Hey everyone, thanks for watching our latest podcast. Lots of momentum building. You guys getting all excited? Leave comments below. Again, we want to take this viral. Smash that like button and make sure to click on that bell for all notifications as we start to bring on bigger and bigger guests. Don't forget to subscribe to our daily newsletter, the Baked In newsletter, by logging on to thedalesreport.com. And we want to take this viral, as I said, and make this community grow. So make sure to subscribe on that channel because we wouldn't be here without you. Thanks again, everyone, for watching.